Hi, everyone. So, 2 weeks have passed. As always, as expected, interesting weeks, a lot of news, a lot of expected and unexpected events. Markets are rallying, at least equities. We see some changes in the dollar, and at least I see some changes in bonds as well. I'm sure I'm not alone on that. So, I'm sure we have a lot to talk about. And Ted, we had a lot of news and macro related and politics related and a lot of changes in the rhetoric of the president of the United States. So, can you help us understand what's going on and what to expect?
President Pump is back, huh? That's a good
Oh
that's a
yeah.
good thing. Jeez. I think we could be on the cusp of another regime change here. I'm not 100% sure, but that's kind of what I'm starting to see, and that's what's happening in my portfolio. So I am going to share my screen, um, start my show. So great graphic today. So today's theme is around uncertainty. And yesterday, Chair Powell, who spoke at the FOMC, said uncertainty about the path of the economy is extremely elevated and the downside risks have increased as of yesterday. And so that raises the question about macro regime. Where are we? Policy, to the extent that we have policy, and then take a look at market signals positioning in macro as we do. We are still, since the beginning of April, in a deflationary macro regime. I will tell you, though, that the market signals from the service that I use for this is pretty much tied between deflation and Goldilocks. So we may see a phase transition to Goldilocks, which kind of surprises me in some ways. But then when I look at where we are from a GDP point of view, so last week on the 30th, we reported first quarter GDP, and I've been tracking this with the Atlanta Fed real-time GDP nowcast. Coming into that print, they were at minus 2.7. The print was actually minus 0.3. But since then, as they started to forecast Q2, we're pricing 2.4% growth, 2.3. Actually, today came out. I did this morning. It came out today. It was at plus 2.3. So perhaps growth was a temporary setback in Q1. Perhaps growth is resuming. From an inflationary point of view, we have, let's see here. I just lost my screen. What are you guys seeing? Can you see is the
Yeah,
inflation?
CNBC, now
inflation data.
PCE price
Yeah,
index.
okay. All right, sorry about that. Anyway, so PCE came out on the 30th. That's the Fed's preferred measure. That was down considerably, plus 2.3% year over year. And the core PCE index was also down to plus 2.6 year over year. So these were below expectation. We've definitely seen inflation, at least in terms of through the March numbers, crashing. Problem is, when you look at true-flation, we've had a little bit of a bump up here to 1.6%. And when you look at five-year forwards, those have actually been in control, down a little bit from the last time we looked at this, at plus 2.17%. The 1 year forward, however, is still pricing 2.9% year ahead inflation. And also consumer inflation expectations are up around 3.6%. So that's an issue, particularly for the Federal Reserve. We also had this past week, came out, I think it came out Monday, ISM services prices accelerated to an index level of 65. That followed manufacturing ISM, which was also higher. So we have some sort of the higher frequency real-time survey data showing that prices are under pressure and rising. So when you think about that just for a second, if we have growth up and we have inflation rising, that suggests actually a reflationary economy, not so much Goldilocks. So we'll see where this pans out, or if this is just a big head fake. We've talked about policy. We basically have policy chaos. It was announced on April 2nd Apparently, we have some sort of a loose deal with the UK as of today. That was cause for news and cause for pump. So pump is back. You better go out and buy stocks now. Let me tell you, this country will be like a rocket ship that goes straight up. So our man is pumping stocks again, and the market seems to respond favorably to that. At the same time, we've got from a policy point of view, we have the Federal Reserve in a heightened state of uncertainty. I counted the times he said uncertainty yesterday in the press release, and then in the Q&A, it was 13 times. It was only he only said wait more times, which was 22%. But basically, he's saying there's a great deal of uncertainty out there around tariff policies. There's uncertainty around the path of the economy. It's not clear what the appropriate response is. We're in good shape. From an economic point of view, our policy is in a very good place, and the right thing to do is to await further clarity. So given the uncertainty, he's not budging. He's keeping it tight. And then we also can see that uncertainty is real. This is an economic certainty index. I forget who creates this index, but it's been tracked. This goes all the way back to the 1900s. And you can see that it is the highest level of economic uncertainty in the US ever. This was COVID. And so we really have a high level, business decision makers are having a hard time making decisions. The Federal Reserve is having a hard time making decisions. No one knows what fiscal policy is really doing. Although we can see that it's about creating deals one at a time and pressuring China. So I don't think that there's as much uncertainty as everybody seems to think there is. After yesterday, we saw rate cut expectations pushed. Last time we looked at this chart 2 weeks ago, we were pretty certain to look at or 50-50 probability of getting a rate cut to 25 basis points in the June Federal Reserve meeting. That has been pushed back up to, as of this morning, to almost 80% unchanged. So it doesn't look like rate cuts are coming anytime soon. That's getting pushed out further. So from a signaling point of view, at the same time, to talk about uncertainty, over the past several weeks, months, we've seen past several weeks, we've seen implied volatility come down pretty dramatically. And realized volatility, which is slower to react, has started to come down. And that starts to push in some of the systematic funds who increase position sizes based on based on realized volatility, so forcing them back into the market, increasing their exposure in U.S. equities. We also pointed out a couple back on 4.7. We saw that max backwardization in the VIX term structure was a high of 37 in the front month, all the way down to 24. As of today, we've really started to see some sort of a normalization, a return to contango, at least in the first through July. And then it's then we've got sort of back month out here still in backwardization, but we're starting to see some level of normalization in the curve, and that's probably stabilizing for the market itself. We also seen bond vol. This is yesterday. I don't know where it was today, but bond vol has come down. So it has been sort of drifting lower since the peak about a month ago. And at the same time, as there's been a lot of uncertainty during that uncertainty period, we saw gold up, gold vol up. So this is the GVZ chart. I track GLD 30-day at the money. But it's pretty similar. So we've seen gold vol increase pretty dramatically. So spot up, vol up. And that usually suggests that we're kind of reaching a point where we might be nearing the end of a run and at least a consolidation period in gold. And we'll look at that as well. Oil has sold off dramatically. It has sort of stabilized. Oil volatility has stabilized at a higher level, and we've seen some pretty strong counter trend moves over the last several days. I think WTI was up 3% or so today. So we've got some interesting movements at play. Whether this is a new sort of calmer paradigm, unsure. So we'll see. When I share some of my trading ideas, I share my dynamic positioning portfolio. It is a trend following portfolio. It includes bonds, equities, commodities, alternatives, and FX. I also have included a mean reversion overlay, and that mean reversion gets me into positions that are very oversold and starting to see some accumulation. And I also use trailing stops that are 2.5 times average true range, which is a realized vol measure. And when my stops are hit, I take 25% off a day until the position's closed or it moves back above my stop level, and I keep the position open. I also trade around core positions, buying dips, selling rips. So coming into today, I created this chart this morning. I've had a pretty solid short US dollar position via FXY series of FX positions. That is starting to come into question. I'm out of actually FXB as of yesterday. FXY, my stop was hit today, and it actually was hit but closed above my stop level, so the position's still open. But we've got some turmoil here going on beneath the surface. Long gold, GDX. As far as bond positions are concerned, I'm in HYG and LQD, and I've been cutting BND, BNDX, IEF, TIP, EMB, and today TUA actually triggered. So, we're basically fixed income's not doing well in any shape or form. I remain long IVOL. I'm also long EZU, EFA, EEM, SPY, and Qs from an equity point of view. And in my trading account, I have a long FBTC position. So when I go and look at some of the positions, I'm going to just run through some of these charts fairly quickly. What I'm going to share is the weekly screen, followed by the daily screen. And on the daily screen, I'll show you some trades that have been done. So I got a signal back the week ending this beginning of the 7th. So that high volatility week, I actually got a signal to get long SPY. Which I did. So I got long here on the 11th. Now I have only a 15% of max position because for me, SPY is bearish trend or SPX is bearish trend still. Let's see, where do I have that trend level? Yeah, hold on, it doesn't matter. Anyway, I still have it as bearish trend. It's 3-month price momentum. And so we're really looking at this level here, which is the breakdown level at 5,700, 5,785 as a SPX level where this thing might start to fall apart. But because volatility has come down on a realized basis, my system actually had me increasing position size on Monday. Not a lot, but I did add some position size to that. Same applied to Qs, which I'm also long. We talked about this briefly when we spoke earlier before the call, but we had this big down move in EFA, which is ex-US stocks, and then we had a V-shaped recovery. This thing just gave, if you didn't jump in when you had a chance this week, then it was awfully tough to buy because the thing just kept going up. But we got long here on the 22nd of April, added position, still in the position, haven't taken anything off yet. Actually increased position size, and we'll see. Still long here. And then EZU, which is Europe, similar chart, got the buy signal back around the 7th, end of the week of the 7th. And then we have been adding to positions in EZU. So a decent position in EZU. It's been flat this week. SPX has seemed to take center stage. From a bond point of view, so I've been in BND, and it's been just sort of chopping around here, no real movement, but because of when I got long, which was here, I've actually started to get out of my position. So actually today was my last day. I actually closed down below my stop. You can see stops were hit here, and then it closed back up above my stop yesterday and then hit my stop again. So I am out of BND. BNDX, which is international bonds, is actually starting to give me a sell signal. this week on the weekly chart. I am long this. I took some off last week because of this sell signal. So let me go back. So this actually triggered last week. And so this is that weekly sell. So that causes me to take 25% of my position size off, which I did on Monday. Position's still open. Stops are still in place. Still long BNDX. Tip, very similar. Bond position, kind of chopping around, going nowhere. Out of this position today. Stops were hit here, here, and here. Out. No more tip. Eyeball. This has been a really strong position for me. It's really probably like one of my top performing positions of the year. It's relatively low volatility, even though it's called interest rate volatility inflation hedge ETF. So it allowed me to really ramp up my position size, start to get a sell signal here. And then today, oh no, I'm still long. I was thinking of TUA, but eyeball still long. Eyeball added to the position. We may be getting close to my stop level here, so we'll have to see how this plays out. If we get, this is probably a good spot to add to the position if you want to remain bullish. But given the state of bonds right now, I'm not sure that I would be adding to the position. And my system says I'm at size, so I'm staying put. TUA, that's what I meant to mention. So TUA this is short-term treasury futures. That's sort of a leverage play on your 2-year. It's put out by Simplify. It's been a core position for a while, starting to chop around, volatility going up here, price size getting, candles getting larger, volatility rising. And then today, actually, I've been long in through here, took some off, bought some in the middle of the range, bought some again last week when this thing pulled back. Today, came in at around 3 o'clock this afternoon. So I haven't updated the chart, but I've had my first stop hit in TUA. So bonds not looking great. Gold has given me some fits. I've gotten weekly sell signals back here. I got a weekly sell signal a week ago. I've been hedging that with put spreads that keep getting attacked on me, and I can't hang on to the put spreads because gold keeps going higher. And then, of course, we are starting to perhaps roll over. Maybe this is a good spot to add. I don't know. I added here. I took some off here when I had the weekly sell, and I still have a okay size position in gold, but I'm just going to wait till my stop hits. I think my stop's around 294 at this point in time. So if it's hit, it is. But still looking at long gold. But it's definitely starting to with that increase in volatility, really starting to chop around, and it may be a time when we need to take some off of gold. So we'll see. GDX is weekly chart, not dissimilar. Some sell signals, not performing particularly well. You can see volatility is compressing actually here. I bought it, added to the position here. I am just waiting to see if this hits my stop as well. A few more charts. Okay, so this is a good one. So the weekly, this is UUP, so it's Invesco DV Dollar Index Bullish Fund. As I mentioned, I've been short dollar, and as you can see, this is actually, the signal is worthless until tomorrow close. Because it's a weekly indicator, so you look for closing prices on this. But what I'm seeing is that I'm getting a buy signal in UUP, and it's basically from very oversold levels, as you can see as well. And so if this stays as it is, I am going to be adding a UUP position to this portfolio. And the other, so you can see where we are. We're very extended on a short-term basis, but this is starting to make maybe a slightly higher high. Maybe this gets crushed and pulled back tomorrow. I don't know. If it does, then clearly I won't be adding to the position, but it is raising havoc with a balance of my short dollar, which is long yen. So like I mentioned, this is a weekly chart on the yen, sell signal several weeks ago, took position size down. But actually, last week on the 1st, when this thing sold off pretty hard, I added to my position because I thought I should and could. And but here we are today. Actually, my stop is at 63.08. And it hit 63.08 today and bounced. So as of right now, I am still long in this position. I didn't take any off today because it was just kind of sat there and it was so far over and extended that I decided not to take the position off, sort of a discretionary move. But we could, if we get a sell again tomorrow, I start taking the FXY down. FXF, which is Swissy, very similar situation to FXY. And you can see very oversold on a short-term basis. And I've been a seller. I've added no more to this. I had built up my position here, and then this thing went parabolic back on the mid-April. And so I basically, ratcheted down my position size. Got probably a 2% position left in the portfolio at this point. Last thing I'll hit on is FBTC. So in my world, this just flipped. It flipped neutral trend for me a week and a half ago, and it switched to bullish trend for me as of yesterday. And so as let's see, just going back, here's the weekly. We got this sort of delayed sort of buy signal that came in. I traded it because it was bullish. It was bearish, so it was a counter trend buy, and I basically took quick profits in it. Well, since that time, it stabilized here the week ending the 28th. So I took out a small position, and then I had FBTC flip bullish on me at the end of last week. So on Monday, I took out 100% position size on FBTC. This is not in my dynamic positioning portfolio. It's in my trading account because the broker that I use for that won't allow me to have Bitcoin. So anyhow, it's an interesting setup and a lot of changes sort of under the surface taking place and causing me to do more risk management work than I'd like to be able to do.
Oh yeah. Now every day we need to do a lot of actions, otherwise it will not work. So Raphael, what about you? What you see in the markets? I know that you nailed Bitcoin, and yeah, so it was a great trade.
Yeah, thank you.
Yeah, so what do you see in the markets and what are you trading?
Yeah, actually agree with what Ted is saying about bonds. So I will talk about that. Still long, sorry, still long the S&P, still long Tesla, and initiated a long Bitcoin, which actually paid quite nicely. I guess you're going to talk about all the levels and stuff and the new products that will come out because I've been using VAI implementations in my trading and it's been great. So anyway, let's let's dive into the charts. Okay, so let's go to ES first. Okay, so on the last show, I was saying that I would expect a move up, and in this vicinity, which we went to, we would see some sell signal. The good thing was that the sell signal aligned with one of VAI quarterly target at around 5644. So took some out there. Today, for the past 2 days, the sell disappeared. And you can see here on Matrix, the overextension disappeared. So as we got the confirmation of the break to the upside of the 5700 level, also coming from VAI system, I took the long. I had a first target at 5740. The idea is to pay for the trade and move the stock to break even to see how far we can go. But ultimately got stopped on the ad before the close as this level was retaken. So my issue with ES for now, they are similar to what Ted said. So we are a bullish trend on MFR. The problem is on my volatility system, trade is still below trend. And when you want to see something actually run, you need to have trade above trend. And this is not the case right now. Another issue I have is the fact that it's been overbought for the past 3 days. And you can see here, and it's not going away for now. Another thing that that is printing is the buys on VIX. They are still printing. They are not going away. We went to the level I was mentioning 2 weeks ago, 22. For now, we are still stuck there. It's not going away, but the buys are still printing, and this I really don't like. Another thing that I use also to give me some warning. Actually, it's dating back from the days with Brian, who actually introduced this ticker to me, and I've been using it. It's QYLD. Anytime I have sales on QYLD ticker, you have to expect some kind of correction. So you also have another thing, and Vi will talk about that. You have a big level. I think it's 5, 6, 17. I will talk about that. It's a very big level that should not be broken. So you have to imagine I've had sales on the ES. I have sales on the QYLD tickers that I watch for short-term or long-term tops. I have buys on the VIX, and we just failed to confirm 5,700, which is a big level in order to reach the yearly open for ES. And just below, we have a big level that should not be broken. So for now, I think I'm going to play conservative regarding ES. I'm going to watch if we can retake this 5,700 level. I want to see if the buys are going to go away for VIX. And also, I want to see the sales go away on QYLD. But short term, I'm still expecting a move up on VIX. I'm surprised it didn't happen today. I thought we would get it before the show. And when I saw this 5,700 level being taken out, I was like, okay, not happening. Market is too bullish. But now we are still back below this level. So maybe it's coming. So that's my view for yes. I would be watching if we start to see some sell-off. I would be watching the matrix to see where ES is when we will be at the low of the cycle down on the daily of matrix. So that's what I'm thinking right now. Of course, Europe is a bullish AF. I mean, what's a market without DAX actually ripping? So, I mean, why trouble yourself buying US stocks when you can buy the DAX, right? CAC looks still bullish as well. It's starting to roll over on matrix. It's exhibiting the same issues with as the US. So you still have a trade below trend. So definitely, if you want to trade Europe, stick with DAX. I mean, nothing has changed. FTSE actually looking more like DAX than the CAC. Bullish also on MFR. And you can see here, actually, trade is starting to climb back up. So maybe the early innings of confirmation of the bullish trends that we've been seeing in Europe. Now, one thing I want to talk about is the dollar. So you guys know I'm very interested by watching the dollar because I want to play the short Euro USD position. And considering the crazy move we've had in the dollar, but also in Euro USD, of course, I think the trade short Euro USD will be quite insane. So one thing that has happened today on DXY is DXY has started to reclaim my volatility trade. This is the first step that you see before transitioning to bullish. So I'm definitely watching that like a hawk. You can see here in the past, anytime we reclaim trade, this is the start of a bull market for DXY. So this is something you should have noticed today. Definitely something is brewing in the dollar. You can see here also on the Euro USD, volatility in blue here is starting to climb back up. It has broken trade, and volatility of Euro USD is starting to transition to bullish, meaning the asset is, in my opinion, about to transition to bearish. So I'm watching that. I want to see a confirmation tomorrow that DXY is clearly reclaiming trade, and there's a good probability that I will initiate a position short Euro USD. Now VIX. So 2 weeks ago, we said the reason why I was initiating a long equity position was the fact that we rejected MFR trend as well as my volatility trade and trend on VIX. And of course, I mean, this arrow was made before the last show, and the target was mentioned. It was 22. I think we hit it today. Yeah, we hit 22 today. And you can see the B and MB, they are buys and mega buys. So it's oversold. I'm getting buys. My bias is still to get some kind of rally in the VIX. And again, my expectation would be to see some kind of correction on ES. And the two scenarios I have mentioned 2 weeks ago, they are still there. Either we get a small sell-off in ES, which is another dip to buy for the next leg up, potentially to the yearly open, or we transition back to bearish. So now it's very difficult to know. I want to see what's going to happen when those buys disappear on VIX, when the sell disappear on QILD. I've mentioned that before. Now on to the regular joke of the show. So oil rejected the trend 2 weeks ago, and it went to the gutter, like 55. Still not a buy. I mean, I will keep repeating myself until I see trade and trend cross. For now, still not interested, despite the fact that it's getting very cheap. But for now, the setup is still not there. Now gold, my opinion has not changed. So I'm still out from beginning of April. Volatility is rising. It's still very choppy, and I'm not surprised that we are seeing -2%, +3%, -3% days, and people are getting chopped, and that's not surprising. It's because volatility is increasing. We went to the daily mean 2 that I've kept mentioning for the past 100 shows. And this should not surprise you. So until we see volatility stabilize, until I see trade coming back down, I have no reason to get back in gold. And the fact that Ted is mentioning that he's starting to see some warning sign of a potential top, I think it adds some more data to my view. Then let's go to Bitcoin. So the trade in Bitcoin was simple. You had sales printing here at the end of April, but the price didn't correct. And what you saw also here on Matrix was the fact that volatility in gray was very, very controlled. You can see the difference with the bear market that we've known for the past month. So volatility in gray here, volatility in gray here. You can see it's definitely not looking the same. Another thing that happened was the cross of trade and trend. And you know the setup, when trade and trend, they cross, This is when you start to look to initiate position. When I saw that we were holding the yearly open, I said, okay, let's fucking go. Let's take this thing. I took some out at 98,936. So this is one of the target from Vai as well. So I'm gonna let him talk about that. And the ultimate target is above 110K. So that's where I'm gonna look to probably close the position. There are targets along the way, but this is my ultimate target for this new bull run that we are seeing in Bitcoin. Now with yields. So I'm starting to see the same thing as Ted and Vai. You can see here yields. 2 weeks ago, I was at a loss of word. I could not know if volatility was going to go up or down. It was very surprising that despite the fact that trade and trend crossed, I'm talking about yields, not bonds, yields. It was getting back into the neutral area on MFR. And what we are seeing now is we are reclaiming the trend on MFR, and volatility is starting to point down. We are starting to make lower high, and next step would be to make lower lows. The 30-year is exhibiting the same pattern, and this one actually started to make, not yet. I'm expecting to see the same thing. So warning sign for people who are still long bonds. I'm looking at yields and they are transitioning to bullish, meaning warning sign for bonds. They are, in my opinion, about to transition to bearish. Vai will address the long-term and short-term correlations between stocks and bonds. It will give you some more info about it. And now Tesla. So Tesla, I'm long since 225. Took some out at Vai's level at 263, out some more 281. I've stated my target on Twitter. I'm looking into above 300 to take a big chunk out. So sure, I could have gone with this monster PLTR. Maybe I chose the wrong horse, but this is my way of expressing the fact that I think risk on is back. The only question is what's going to happen in the next days or weeks. Maybe it's going to prove me wrong, but I think I'm sticking with the fact that we're going to get scenario 1, meaning slight correction with higher low, allowing us to load the bot even more. So that's my short take on the market. Let's hope it will help you.
Yeah, great presentation. Yeah, actually, I really like your comments on PLTR. You know how I react to those all the time. Yeah, so we see how it goes. Okay. Yeah, so target for Bitcoin, at least from my perspective, is 100 to 12,000, and I really expect to see that. So what I wanted to start with is, as always, correlations. And actually, I tweeted about stock bond correlations, but I really wanted to mention, first of all, that we see potential regime change in the short term, at least in the short term, which is quite important. It means that stock bond correlations are turning negative. This correlation matrix, yeah, let's hide everything to make it easier. This correlation matrix here is a 10-day correlation, and if we go to SPY TLT, you will see that it's negative. It was more negative intraday, but now still minus 0.25. If we go to a longer period, which is 21 days, you will see that it's still positive, but again, short-term periods have more noise, but of course, you will first see the changes in the shorter term periods because they react faster. So if it's not a noise, actually it will be a very interesting signal, and at least for me, a very important signal. And especially when I will talk about bonds, especially knowing that I think that yields are going higher and bonds are trying to go lower, that can be a interesting signal for stocks and not what most of FinTwit expects. So if stock bond correlations remain negative and will turn negative, especially on longer term periods, and bonds go down, it will be quite a nice run for stocks. Now, average sector correlation to SPY is actually at 0.57. It went down. Risk on environment is not overcrowded. We see not a huge dispersion all over the place in the markets, and that also makes me not wanting to be very bearish or to try to predict major crashes. And by major crashes, I'm not talking about single assets. I'm talking overall coordinated crash like we had. So yeah, stock bonds correlations were very high, but now they are going down. And if we change a period to 21, you will also see situation that even though they are high, which of course, because in April we had quite an, let's call it interesting month, and a lot of things have happened, but this correlation is pretty stable, and I would expect it to go down. But like I said, even though we need to watch what is going on in different time frames and horizons, but you will see changes first in the short term, which is, of course, an obvious thing. But like I said, short-term average correlations are not concerning me a lot. Now, risk spreads. Now we will talk about the risk spreads, and you can do the exact same with SPY TLT. I just happen to prefer to look into the futures markets, but this is ZB spread, and why I call it a risk spread is basically it's a very, very good indicator for capital flows and for overall risk and regimes in the markets. And this spread is not breaking. By not breaking, I mean that it's not going down and not going down by a lot, and that's another sign of a healthy stock market move. And yes, of course, it sounds very strange to call what we see in the markets healthy, but whenever I see risk spreads like this, so this nice grind up and the levels not breaking, and this spread going up, I say, oh, okay, so I still don't want to think about anything too bearish in the markets. But now let's talk about actual numbers and prices and what I expect, what I think will happen, and where to act when we need to act. So first of all, I will start with ES. And the ES, as Raphael mentioned, again, it's not a secret, nothing proprietary. But current quarterly pivot is 56.17, and it's the most important dividing line for me. And I always show where you can find these levels, how you can get them on TradingView. But yeah, so 56.17 is the last settlement price of H contract in ES. That's all it is. It's not some complex calculations model or calculus or whatever it is. It's just the price where it expired. And I always monitor these prices, and I always use these prices to see if a market wants to continue to go further to any direction it's going or not. And yeah, so NQ it's 19,450, and of course NQ is way stronger. And what I meant by that, I believe I tweeted a couple of days ago that NQ is way stronger. It was just two things. First of all, NQ took out its quarterly dividing line or quarterly pivot first, and when NQ did that, the ES was still like 100 points below that, and I was monitoring the reaction in NQ. So I was monitoring if NQ will reject it or NQ will continue. And of course, we all know that NQ continued. And then I was pretty sure that ES will catch up and will take out its target. So, sorry, not target, but pivot. Targets are a different thing. I will spend some time today explaining. But we will make dedicated videos about that because it's something that we will introduce on my fractal range to save people from buying dips in the middle of nowhere. I was always wanting to not tell people any levels, just to provide risk management tools, but I see what people are doing. I see that people want to buy dips, want to buy bearish trends, want to short bullish trends, and so on. So at least we will provide levels where at least with tighter risk management, it makes sense to try if you really want to. But yeah, so this is the level, and you can get those levels on TradingView very easily if you just go to H contract, for example, chart, or Z contract, or U, and so on. But so we are above this level. And even though, yeah, we rejected previous September's pivot of 5,700, but at least for now, it looks that for the last week, the market doesn't want to close below 56.17, and it tried multiple times, and that's for me a very major pivot. And above that, I can't allow myself to think about any shorts. Of course, we all know that with this volatility and with this market can go below that level pretty fast. But when it happens, then I will say that the next level will be 55.14 and so on, and we will have a lot of levels. About that, we can literally have some levels. And basically, what I will be looking at today, I was looking at 57.46. Basically, it got rejected quite hard. And below 56.17, which is close to the level of 56.30, but quarterly settlement based on weights is way more important for me. If we close below 56.17, we will go to 55.14. I'm sure about that, and it will be just a question of time when it happens, from level to level. And there will be three types of prices that I talk about, and that I will provide. There will be pivots, and there will be levels, and there will be targets. And actually, it's not confusing at all. And I will do my best in the next month or so to provide content explaining it and making it as simple as possible, because actually it is very simple. So first of all, pivots. Pivots are the lines where something changes, and it depends, of course, on the time frame, but pivots are not some calculations. As I said, it's a precise price points. It can be a settlement price. It can be things like yearly open, event highs, event lows, and so on. So when I provide pivots, I will also tell exactly what is the importance and why I say that. But yeah, basically current quarter's pivot 56.17, and the most important price for the year is 59.49. Of course, we will talk about that when we reach it, because we are still quite far away. But yeah, these are the levels for the ES I'm looking at, and the next settlement price would be very close to the next swing level, which is 58.40, and 58.40 is where the contract expired in December. And like I said, these prices are very, very important for me. But now, what I view in the ES from the target perspective, and I on the 1st of May, I tweeted a big thread with upside and downside scenarios and targets for I believe 37 assets or something like that. But I did it for stocks and ETFs, so we can take a look at the future. So first of all, for the monthly target in the ES, these would be the numbers, and they are not. They look very far away, but in this regime, anything can happen, and we all know that. And so, base case scenarios for the ES would be 51.47 to the downside and 60.88 to the upside. So it means if we get a move, strong move above or below the pivot, which is this line, that's what you can expect to see. For the NQ, it's also situation is really the same. The next settlement is a bit more far away than ES. The next settlement price, first of all, is I believe 20,948. This will also be very, very important level. But if that is broken and if we get a rally, basically that's the price that you can easily see if President of the United States tells everyone to buy stocks again, or if he signs a deal with penguins or something like that. So we will see, of course. Yeah, but target to the upside is 21,626, and target to the downside is 18,042, and bearish targets, of course, would be new lows. So not base case, but bearish targets. This is what I see in the major indices. Now let's talk about stocks and ETFs, and let's start with gold maybe, because what happened with gold is it got rejected from actually an annual target, but I will not talk about annual targets because at this point no one knows these targets, so I will not confuse you about that. But for the month, what we see, okay, we opened, we tried to rally, we kind of tried to reach previous highs. Not really, it depends what instrument you're looking at and so on, but at least in GLD it has not happened, and we are moving lower. So of course, for us to expect reaching any of the targets, first of all, we need to take out or bounce from the pivot, and pivot will be here, which is, again, in this case, it's the monthly open price, because pivots are not proprietary. These are the prices that I use that are important for me, let's call it like that. But for GLD, we can easily, if we get another move up, we can easily expect 320, or if we break hard, it can also go to 2,275 price level. This is what I expect to see if we get some more volatility and trending moves to any direction in the gold. USO is above the pivot. USO is above the pivot, and if we get a move up in oil, the first target would be 72.2, and the target to the downside would be 54.9. These are the levels where I would sell some if I'm long, or act depending on the positioning. And anything in between in this regime can be considered as a noise. And of course, buying the breaks from the pivot, at least for now, would have worked. But I'm not long oil. I'm not short it. I have no position in oil. And yeah, now with bonds, and this one is very interesting scenario, because bonds are breaking down, and it took out quite a few important levels, and I have this monthly target for TLT of 84.72. And based on other things that I see in the market and matchups, and most important matchups will be risk spreads and stock bond correlation, I can easily expect TLT to reach that price this month, or at least this price. Now, where I would consider buying bonds. So I would consider buying bonds if we could have a strong close above the pivot, first of all. So it would have to go quite a lot before I would even consider buying bonds again. And I was long bonds in March in April, sorry, from the quarterly pivot and the yearly pivot, but most of my position got stopped out at break even when we came back to it. My target was close to 91, but we have not reached it. I believe it peaked at 90.2 or something like that. Yeah, so again, I'm not long. I expect it to go down, and I would not touch this thing on the long side, at least until the target is reached or the pivot is retaken. Yeah, now stocks. So yesterday I tweeted about Google, and that Google reached its monthly target, base case target that I tweeted, and it got rejected, and now the stock is going up. So if someone was short the stock, this was the place to cover most of it, or at least some, and yeah, this was the place to transact. I know that some people bought, and actually that's one of my fears with the targets levels and everything that I'm showing, trying to help, because I have this fear that people will just start buying dips, placing buy limit orders at levels and so on. So I just want to mention that it's not the way, but hey, yeah, that what happened was exactly what was expected. We went to the target, and now we are up. So of course we will see if that target holds or not. Yeah, PLTR. It was my favorite stock. I still have quite a big position with average price of like $14 or something. But yeah, I was selling on the way, and I started selling some calls on it. But yeah, I thought, okay, hey, at least I need to talk about at least one stock which is not the usual one and interesting. So I said, okay, I will talk about PLTR. So basically, target to the upside would be $146, where if you are long, which is a crazy thing to say, but yeah, $146 is the upside target, and 93.7 is a base case downside target. So yeah, these are the levels to transact, and actually, price is approaching the pivot, which is just a monthly open. So keep in mind that above the monthly open, buying will accelerate, I'm sure, because that's usually what happens. Okay, now bag seven. So we can start from NVIDIA. NVIDIA is not that terrible, and above monthly pivot, and it looks good on a quarterly basis as well, and yeah, it looks good on a quarterly basis as well. But upside targets are 127.3. If you ever see this price this month, that would be the place to reduce your position if you are long. And the downside, potential downside to $98.8. So how I would trade this position is if I'm long below this level, which is 113, below the pivot, I would not be long anymore. Basically, I would not be interested in this stock below 114 in the short term. If you're long from way lower, then of course you can just reduce or so. But if your price is not way lower, then yeah, I would not be interested in owning the stock below $113 at all. Microsoft and Meta, I can immediately say that these stocks look the best from the entire bag seven. So yeah, Microsoft targets are 457 and 405. These are the levels to watch if the price approaches them. Apple. Oh, yeah. Apple is one of those where would definitely not be surprised to see the 100s, so like 181, 182 handle, and because this stock just doesn't want to collaborate with its peers and with entire markets. So in general, and we can also see that from the correlations. If you create a custom correlation tables in my fractal range is what I recommend you always do. You will see that basically now the stock is just living its own life and is not collaborating. So I would not be long the stock below the pivot level, and my downside target is 181, and upside target, which first of all, before we can talk about upside targets, it would have to take out the pivot level, but upside would be 237. Yeah, Google we covered. Target is already reached. Tesla. Yeah, Tesla, Raphael, I believe was talking about 311 or something close to that. I would say that if we get another rally in Tesla, 320 is very likely. So yeah, 240 would be downside and 320 is the upside where I would be looking at. And yeah, above the pivot, no shorts. Meta, as I said, at least for me, Meta was looking quite good. So Microsoft and Meta were the strongest stocks in Back 7 for me from the way how I look into the markets. But yeah, if we close below the pivot, then 535 and the upside target is 648. Netflix, yeah, 1278 and 966. This stock is a rocket ship, and based on its volatility profile and risk profile. So when we talk about the ranges, especially the longer term ranges, we will literally see that basically we are at the low end of the regular term range, but if you look at the longer term range, you will see that basically anything can happen, and upside is almost capped. So keep that in mind. And upside is almost capped at 1220, yeah, 1230, 1245. So this level, and the target would be 1278. So it can get some trouble reaching that, but yeah, we'll see. So, and the currencies, so USD JPY. USD JPY to the upside is 148.3, and to the downside is 137.7. These are the prices I would expect to see this month. And for now, at least for now, it looks like USD wants to go to 148 because it had not a lot of trouble taking that pivot out, and it's just going. So we will see how it goes. Yeah. So I don't want to talk a lot about what's coming because it will confuse people if I just try to do it in a couple of minutes. So we will do dedicated videos and dedicated Twitter shows for what, but the goal is to make my fractal range a complete risk management and portfolio solution platform where if you see that upside downside ratio on the range is good and you want to buy a stock, you will also see if the stock is trading in the middle of nowhere, what are the potential places to execute, and what are the potential targets you can expect, and of course where it would make sense to get rid of the position. So basically the places where you will know that well, it's a wrong position to have, and of course, yes, and I hope it will help to stop people to buy or short stocks just because they see one signal like maybe upside downside ratio or something because I saw the situations. I know that people are doing that even though for years Raphael and I we are repeating, but don't buy bearish trends, don't short bullish trends, and so on. People like to buy dips, so at least the goal is to at least if people want to buy dips to transact where it makes sense. Yeah, so that's it from me. I hope it was useful, and I will stop sharing the screen.
Thank you, Vai. It was great as always. There are no questions in the chat. So you've mentioned that we will do a dedicated video. So it's gonna come probably, it will come next week. It's gonna be on Twitter, not on YouTube, but we can repost after the on YouTube. The idea would be to reach a maximum number of people. And like Vi said, currently MFR is solely a risk management tool. And we know our users, they use the range, sometimes not in the proper way. And Vi has proposed to of the show.
Yeah, I lost you for quite a while, but now you're back. Okay.
Sorry.
Yeah, we have one comment on YouTube. Awesome objective. I looking forward to it. So I'm also looking forward to it, but again, I will repeat myself a little that I'm quite scared about that and I'm scared about that only because of one thing and one thing only, that people will start placing limit orders and just buying without the context just because but like I said, first before we launch yeah, I need to make sure that there is enough material and content for people to really understand what it is and how to use that. But yeah, it's good that you like it. Thanks for the comment.
Okay, thank you, Vi. We can wrap it up, I think.
Yeah, so thanks everyone for watching. I hope it was useful. Ted is already gone. I believe he had to leave. So
He had to
thanks,
go
Ted.
for a walk with his wife. He sent me a message.
Yeah. So thanks, Raphael. Also, big thanks for Ted,
Ted.
for joining, and thanks everyone watching. And yeah, so see you in 2 weeks. And before the market talk, maybe we will already have some initial materials on what's coming. So yeah, see you all. Bye.
See you all. Bye bye.